Hi everybody, this is Jean from Total Tax and Accounting, and today I'm going to cover innocent spouse. So, Internal Revenue Code 6013, Section 6013 allows taxpayers to file a joint return if they're married. So that includes domestic partners and same-sex unions. And so in doing that, when you file jointly, you have joint and severable liability for the tax due on the joint return. So if we file and we owe $1,000 and you don't pay, I get to pay the whole thousand. I just don't get to pay half. So you have the entire liability. Each of you has the entire liability. They can't collect double, but if one doesn't pay, the other one has to. Married filing separately returns can be amended to become joint returns. The reverse is not true. A joint return cannot be amended to elect married filing separately. So you want to work with your tax practitioner and really evaluate what your best scenario is. So keep in mind that joint liability, if you have a paragraph inserted into your divorce agreement that says my ex-husband or my ex-wife is liable for the taxes, that is not binding by the IRS. They do not recognize state originated documents. That's what a divorce decree is. So what that does allow you to do is it gives you the power to sue the person who didn't perform in the divorce decree, if your assets or income are seized by the IRS. So just keep that in mind. And this would be one item that would be considered for equitable relief in innocent spouse, and I'll touch on what that means in a few slides here. So innocent spouse, Internal Revenue Code 6015 creates 3 types of innocent spouse relief. So B, C, and F, don't know why there's no A and E and D, but this is how the IRS rolls. B is innocent spouse relief, C is separation of liability relief, and F is equitable relief, which we just sort of mentioned in the last slide. So we're going to cover C first. In this case, you must be legally divorced or separated for at least a year. You can have no actual knowledge about the understatement of the item that's giving rise to the tax. So you couldn't have known. The relief must be requested within 2 years of the collection activity beginning. So we're going to ask that we be treated as if the taxes were filed separately. There's no refund available here, but at least if you're in a liability situation, your liability is going to be separated. 6015F. So this lays out the IRS approach to evaluating claims for equitable relief. And this takes into account all the facts and circumstances of your situation. If there's underpayments, meaning you owe tax, you must use equitable relief. The liability is apportioned. If you generated 60% of the income and he generated 40, they're going to allocate the tax liability based on those kinds of factors. Under the 6015F, refunds are available. Equitable relief, what they're going to do, they're going to determine the collectability of the tax liability. So that's going to include the Form 433 analysis. And basically that is painting a financial picture of you and your net worth, if any. Uncollectible status, which is known as CNC with the IRS, is good, but is not necessary to gain equitable relief. There's just a number of factors that go into this particular situation. So they'll consider your marital status, what economic hardship you may experience or be experiencing or could experience, their knowledge or the reason that you could have known, the non-requesting spouse's legal obligation, so the other spouse's legal obligation, the significant benefit that you may receive, They look at compliance with income tax laws. If there's been abuse in the situation, physical or mental health issues, or financial dominance. For example, if one person in the household controls all of the money and pays the bills and you don't have access to money, then that's considered financial dominance. In order to request innocent spouse relief, you need to file a Form 8857, and it must, again, be filed within 2 years after the IRS begins collection activity for the tax return in question. So it's important that you act on that once collection activity begins. So the IRS is going to offset the taxpayer's income tax refund as it goes through the collection process. So even if you are divorced and in year 3 you haven't done your 2-year for innocent spouse, you're getting a refund. You have a liability on the IRS collection side, they're going to keep your refund. You're going to want to file a claim that filing of the claim by the IRS in a court proceeding and the filing of the suit of the United States against the taxpayer to collect the joint liability. So you really don't want to get to that point. The issuance of Internal Revenue Code Section 6330 notice of the IRS's intent to levy and the taxpayer's right to collection due process. That's where you're really going to want to include a tax practitioner when you start getting the notices from the IRS so that they can raise a CDB hearing, collection due process hearing, and at least toll the collection activity, which just means stop it temporarily while you work through whatever direction the A, the C, or the F that you're going to go, or A, B, F. You can also do an offer in compromise, which means settling the tax for less than is owed. There are specific ways that we have to go about that, so please don't fall for the late night television where they take $4, $6, $8, $10,000 and don't help you. Talk to a practitioner who will give you a consultation for a small fee to see if you're even a candidate for this. It's very specific, so I don't want you throwing away your money before you know if you can even get your taxes reduced. You can do an installment agreement, which just means that you're on a payment plan based on that 433 form that I touched on, where it gets your financial picture dialed in. That may bring you to uncollectible status, which just means you're not able to pay now. That is not a forever status. That gets revisited periodically in case your circumstances change. And then there's also bankruptcy that you can discharge your taxes. That's income tax only. Generally, you cannot discharge sales tax or payroll tax if you're a business owner. So if innocent spouse sounds like something that has happened to you or someone you know, please seek a qualified tax practitioner or an attorney specializing in tax to help the person sort this out. Nothing the IRS does is extremely complex, but if you just don't know how to navigate their systems and processes, it just really can add to your stress level. So if you, I urge you to get, professional help with this. I appreciate you watching. I'm going to be covering injured spouse in another video, so stay tuned for that. Thanks.